We filled the gap, but look, it's dropping right back off as we see internals falling back down again.
Yeah, you guys may not have heard of this before, especially the newer traders. This is kind of a new phenomenon. It's called the potential for, well, I mean, technically it's called a bear market. You guys have probably never heard of that before, so.
Good morning. Dan here with tradingology.com and the trading room for August 19th, 2021, coming to you from a fine Thursday. As usual, we do have Dave joining us from the Strong Market team. So welcome, Dave. We'll let him get set up and saddled in here. Some interesting activity happening right now. We got the indexes pulled up here. We'll definitely be talking about that. Interesting question from a member that brought up some questions about arbitrage we're going to cover. And of course, it's Thursday, so we'll touch on unemployment records. So we'll see what's cooking there. We do see internals opened up drastically lower, down around the lower bounds here, negative 2,000 on the NYSE. And below here, we were almost close to negative 2,500 on the NASDAQ. So very low internals is coming up. But I did notice right around the same time we were hitting the negative 1,000 mark is when it filled the gap. So we came up and touched the gap. Now we're already dropped off another, we've already lost almost 100 points from filling that gap. So we went up and touched, filled the gap, coming back down. NASDAQ is right around the same close as yesterday, so it's pretty flat right now. We see it definitely is exactly flat, just went negative again. And MES did the same thing, where it came up, filled the gap. Now is it coming back down? So what we're going to be key watching here is, will these internals continue back down? Will they hover flat? Are they going to continue to rise? So we'll watch for that and help out the day's travels. And we see the same thing happening in the futures that while this is occurring. So came up near those person pivot levels, didn't quite make it, but bouncing off the EMAs on the ETFs below. The 200 is a big one. The other one's kind of paused at it right at the open. Qs was a little bit stronger. So as we see today, the Qs are stronger than the Dow side. Good morning, Tom. Yeah, he says, nice trading morning so far. Yeah, it's been an interesting morning for sure, to say the least. Let me know if you got any questions, Tom. I know we're going to talk about your arbitrage question, I believe. Other interesting thing to note, I'll just quickly touch on when we had the big drop at the open, it touched on this 50 simple moving average. So interesting bounce there. And Dave, I was just covering, we filled the gap, but look, it's dropping right back off as we see internals falling back down again.
Yeah, you guys may not have heard of this before, especially the newer traders. This is kind of a new phenomenon. It's called the potential for, well, I mean, technically it's called a bear market. You guys have probably never heard of that before. So, but that's what happens. They fill gaps and then they continue to go lower. And sometimes they buy the dip. Doesn't work. That's what happens in bear markets. Sorry, guys, but that's the truth.
It may take a few days or weeks for them to get used to that. We'll see.
Yeah, maybe months or years.
Right.
But yeah, so I had a couple of nice trades. The spreadsheet, I don't know if you went over the spreadsheet or not yet, but it was a pretty good setup for today. So I don't know if you can get into the Slack channel and show them that, or you don't want to show anything, but the setup was pretty good. We had 2 down days. Yesterday, of course, we're down 382 and 47 on the S&P. Bearish hurting coming in pretty strong. But what tipped me off that the decline would continue is the price anomaly. The price anomaly, when it's high, typically it indicates a reversal in the market, but it was right in line. And what it does is it correlates with the internals. So there was correlation. It means that there's correlation with the internals. So the minus 382 is a valid move, and it's also in line with everything that we're seeing. When that doesn't align with the actual price of the Dow, it's an anomaly, especially if it's over 100 points difference. Like on 8.4, which is the top row that you got there, you saw a price anomaly at 204. It means that the Dow should have fallen a little bit more, but it didn't. So there was some strength there, and that's why we had a 271 point increase the next day. So when I'm swing trading these, and we're going to be talking a lot about this in the live masterclass coming up, but when I'm swing trading and I'm holding overnight or a couple of days, I look at that price anomaly. If I get a big number, then I get out of the position.
Yeah, and today we see, as it's live during the morning, I was noticing looking at the live chart where it uses that exact same algorithm. We have full bearish herding right now. So that's why as soon as it filled that gap, that was an easy signal to say, yeah, we're going back down because we're at institutional level selling. We have supply demand over a -10. Strength is a -12. So those are big numbers when it comes to the markets on a daily basis. We see it hasn't been that big since the last big drop,
right,
a few months ago, or almost exactly a month ago. Look at that, 719. Maybe they're lining up for the 19th.
Oh yeah. Yeah, so I mean, we'll see what happens if that institutional selling continues. We could have another big down day today, or who knows? They may try to rally it into the close. We'll see what happens.
Yeah, one thing that we have seen recently, obviously, is the increased volatility. As we did see, that was another clue on the spreadsheet, as it jumped to over 100% empty volatility. So we know to expect that, which came on the heels of yesterday's volatility that we were letting traders know in our Slack channel, saying, hey, watch out, T-minus 10 minutes to go, we're going to get volatility to shoot up. And I can actually pull up when that happened. So that brought up a few questions from some of our members. Whereas here's yesterday's futures, as it was kind of trading sideways. Everybody knew that FOMC minutes were coming out. So what were they going to say?
Right.
So interestingly enough, I think it was 2:00 Eastern they were released.
It was actually, they released it a little bit late. I think it was like 2:06 or 2:05.
Okay.
Yeah, so it's just a little bit hair late. I don't know if you put your mouse over there.
Yeah, there's the 1:00 hour my time, so that's 2:00 your time. And we had a shoot up there.
Yeah,
a pretty big one. And so that's the Dow. I'll bring over the NASDAQ. The NASDAQ really jumped.
Yeah.
I mean, this was a under 15,000 up to, this was I think it was a 200 tick move. Yeah, almost 200 ticks in that 5-minute candle.
Yeah. One of our members who's in the chat with us today I made the comment to him that I typically like to fade those going into the announcement. So if we're down a lot before a FOMC announcement, I like to buy it. When it's up a lot just prior to the announcement, I like to sell it. And that's what I did yesterday.
And so we'll take them all over. So they all shot up. I'm giving you a little clue right there already on the Dow, but so everyone's thinking, oh, FOMC minutes is going to be good. The Fed's going to keep printing money, whatever they're doing. They're using all the tools at their disposal. That makes it be great. Well, interestingly enough, it happens to hit these levels that we keep our eyes on that I have on the charts here. And if you're curious, I talk about those in our trainings. But look what happened right after. Bam, 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 bam. Explosions happened. Everyone thought it's going higher, bounced right off those more levels. And then look, they bounced again. That's your volatility right there.
Right. So another question that came up, and yeah, those levels work really, really well. And we can tell you why those levels work pretty well. But one of the reasons, one of the things that came up in a discussion in a private chat in the Slack channel, which we respond to members' questions, was whether or not it might be a good idea to put on a hedged position with futures. So, for example, the Dow futures and the S&P 500 futures are highly correlated most of the time, around 10-1. So a 10-point move in the S&P would equate about a 100-point move in the Dow futures. And so so they're highly correlated. They tend to be pretty well they tend to move together. What if you put on, let's say, a long Dow future or short S&P just before that and try to play the volatility? And then you take one side off after you get some clarity about the direction of the move. Well, as you can see, we shot straight up. So if you put on the position before that, you had the opportunity to maybe take a one of the positions off, the long position, take that off. But you don't know. I mean, after the announcement came up, it could have shot up another 200 points. So you have to kind of wait to see what the clarity is in the what traders are going to do after they see this announcement. Well, what happened was we had the pre-market, pre-announcement high. We sold off pretty sharply. How many S&P handles was that?
We were up 40, give or take, or 30. It was up 40 on the Dow.
Yeah.
But then, so yeah, say you're long, if you're long Dow, short ES, you say, okay, we're going to go that way. I'm going to take off my short. So now you're just only one long. Well, all of a sudden your one long that's making you money is no longer protected by the short that would have made you money.
Exactly. So now you're in a situation where you're actually losing. You took off the long, you made a few bucks on that, but now the short is actually much worse. You're still long that one futures contract and it went against you, and you probably ended up losing more than you made on the long position. Even if you waited, let's say you waited until you saw that low around 35.15, and you say, yeah, okay, this is the reaction to the reaction. This is okay, we got the reaction up just before the announcement. I'm going to short it. I buy one to go up, one to go down. I get the drop. And that's the reaction. That's the real reaction after the traders digest the news. You say, okay, now I can take off my short position. Well, then the market races up again, and you're saying, okay, now I'm good. I'm gonna ride that long. Well, then what happened right after that? It just completely falls apart, right? So it's very difficult, and it's a tricky situation to use futures in order to play that volatility. One of the strategies that may work is using option positions instead. And the reason for that is that, let's say you bought a put and a call on the SPX. Well, once you start to see some clarity about the fact that the market is going to start to, either go up or down, you could actually hold both of those rather than getting out of one position, as long as the premiums were not too high. Now, typically, the problem is when we do get an announcement, volatility increases, and it increases the premiums of the at-the-money calls and puts. And so you're going to pay up for that. You're going to pay quite a premium on those. But what happens is, if we do get into a very strong trending market, either up or down, the one that is losing money, the delta becomes smaller and smaller. So the delta that at the money level is maybe at 50. So in other words, for every dollar move in the S&P 500, you're going to gain 50 cents or lose 50 cents. As the market, in this case, the market continued to go lower, the put delta has gone, because it was at the money, started at 50, just like the call did. But now it's starting to gain delta. Gamma is starting to kick in. It gains delta. So it goes from 50 to 55 to 60 to 65. And now your long call delta is maybe down at 30. So now you've got 30 deltas short. And that's how a option position can actually probably be more profitable than a futures position, because there's no premium in the futures positions. It's just a play either higher or lower. But when you're when you got delta and you got gamma controlling that delta, it will increase it as volatility increases. And so the position that you're, it's not making any money, that delta decreases. The one that's in the money starts to go into the money further and further. It goes from a 60 to 70, 80, 90. Now you're making 90 cents on every dollar that the S&P is dropping, where the call option, maybe the delta is down to 30. So you're only losing 30 cents, but you're making 90 cents on the one that's in the money. So that's one of the ways that you can play that.
Yeah, I'd say the key lesson there is if you do leverage the futures, just like we do in the volatility arbitrage strategy that we leveraged for years, is you're in and out, never legging in and out. You're just asking for trouble if you try and catch a move, because that's exactly what will happen is it'll reverse and you'll lose your protection, and then there was no benefit at all to the position. So
yeah, very short-term positions in volatility arbitrage typically don't work out very well. You want to kind of those volatility arbitrage positions you want to hold at a inflection point in that between those two futures.
Right. To scalp the market, don't let the market scalp you.
And Tom knows where that phrase came from. So
absolutely.
It may not be politically correct anymore, but we still use that term.
While you were explaining that, look at what happened to our internals. They're creeping back down toward negative 2,000. And we've definitely dropped right off after filling that gap. So we're down over 200 points again on the Dow. Imagine that. What do we get for the announcements today? We should take a look. It is unemployment day, so they were expecting 365. Well, they came in at 348, so they're probably happy about that, but it's still, almost 350,000 new jobs, and we're at 2.8 million continuing jobless claims. So lots of people still unemployed, lots of people still collecting checks. We'll see if those start to expire. There's always the talk of that, but that's they're saying a clause back. Let's see what they'll probably change it again. There it goes. Now we're back to 200 points down because they're concerned.
That headline right there just triggered something in me this morning. Dow drops more than 200 points, is concerned about the Fed removing stimulus growth. You know what it said earlier in the morning? It says Dow drops more than 300 points. So they had to keep revising it. Now it's 300, now it's 200. And but it reminds me of the you could rephrase that by saying baby started crying about concerns that the parents took away their
the rattle.
The rattle. And it's like that's what it is. It's like the Fed's our parent, and as soon as they start to remove their support, everybody starts crying about it. It's kind of a ridiculous situation when you think about it. We are so dependent on the Fed trying to do something to prop up the markets and continue to be active in the market that the market is not. It just doesn't seem like it's functioning very well at this point. So anyway, that's my rant for the day on the
right. No, I absolutely 100% agree. That's why we do very short term, or at least why I personally do very short term trading. It's like in and out, because you can't trust these guys anymore. I'm like, yeah, we should be in a bear market, or it should be starting. Will they let it? Is another question, right? Yeah, we've got a few down days here, but the question is, are they going to come in and buy everything?
Pacifier was the thing I was looking for. Yes,
there you go.
Parents remove the pacifier and the kid starts crying. That's exactly what that headline reminded me of.
So how long are they going to let the kid cry is going to be the deal here, because we're dropping, we're down, Let me measure this guy again from the top here. We've made an all-time high.
Is it 5% yet? No.
So we're down 2.5% off that, about 1,000 points in a few days. But we saw it did drop before, so will they reverse one of these guys?
Where's the 5% mark? Because I think that's when the Fed typically steps in.
Right around 33.9.
Don't you know? Back at the old lows there.
Yeah, so I think there's a nice range here between. I think this lines up with your 1929 trend line right around here.
Yes, that is exactly right.
So this 200-point range, I would say, is going to be an interesting inflection point.
Yes.
If they let it get below that, because then we got who knows where. Then we're talking 30,000.
Right.
Because that's probably what needs to happen for a healthy correction. The question is will they let it? Another interesting point that I saw with the Russell continuing down. Look at the Russell. We got 1, 2, 3, 4, 5, 6 straight days of down.
Yeah.
And if I focus, let me pull over this guy and zoom in on it.
One of my alerts just went off. Let's see.
We've got only one moving average below. So if the Russell drops below this 2000, all bets are off. That's an interesting one that I just saw this morning. You know, we've been doing this range up here. This
Right.
21, 2200 level's been some support, which we're at exactly right now. So if this doesn't hold, we might have a tiny bit here, but look out below 2000.
Yeah, there's quite a few data points right around that 2100 level. That is kind of looks like a shelf of support there. That it has been a shelf of support going all the way back to February. But yeah, if that breaks, I think we're going to be, 2000 or even lower. Maybe that 1950 level.
Right. We could go, yeah, who knows where we go from there. That would be the next one. Then it's just stair stepping down, you know, because look at, there's where normal, you know, there's what we did before.
Right.
That's when the fun started in 2020. We went from 17 down to 1,000. Can you imagine people freaking out at the Russell back at 1,000 again?
Wow. Yeah. Especially all of those new retail traders that have come into the market. I don't know if you heard, Robinhood came out with their earnings, and they did pretty good. Their first earnings announcement after they went public, they did pretty good, but they doubled the number of retail investors on their platform from 10 million to 21 million in just the first 6 months of this year.
Wow.
And not only that, but they do offer cryptocurrency trading. And guess what was the largest traded cryptocurrency on Robinhood?
I'll just go with Bitcoin. Everyone likes Bitcoin.
Over 60%, 62% of the trading in cryptocurrencies on Robinhood's platform was not Bitcoin. Can you guess what other coin it would be?
Everyone's second favorite is XRP. Not XRP. Ethereum. Not Ethereum. Oh, Tom says the dog coin, Dogecoin.
Dogecoin, yeah.
Thanks, Elon.
Now, what does that tell you about the mindset of the average retail trader? And I'm not putting them down. I'm glad they're in the market. I'm glad they're trying to make some interesting moves here. But Dogecoin is not a cryptocurrency that I would touch with a 10-foot pole. Although I did have one position because I had like $90 left over in my account, and I put it into Doge. Because I said, it's a joke, right? I'm just going to put it into Doge. But no serious investor would probably do that. But 62% of the trading in cryptocurrencies on Robinhood's platform was in Doge. That tells you that the mindset of the average investor doesn't care what it is, as long as they think they're buying a lottery ticket. They think that they can double, triple, quadruple, 10x, 20x their money. And unfortunately, that's kind of the case. It's a very, I think that, and also another interesting thing about Robinhood's report was that they have like $2 billion under management or something like that. And if you take the 21 million and put it into divided by 2 billion, the average person who has an account on Robinhood has about $4,500 funded.
Wow.
Which also tells you that if they're not really for long-term investing, it's not a long-term investment strategy using Robinhood. It's a trading platform that's been gamified, and traders just want to, try to make some easy money, I guess.
Yeah, you hit the nail on the head. They're trying for the lottery ticket. This is literally something that was made as a joke. That's what it still blows my mind. And you got people like Elon Musk and Mark Cuban that think this thing's a real thing. Did they read the history about it? I mean, they're smart guys. I'm not taking that away from them, but come on.
Yeah. I mean, the guy who created it admitted it was a joke, but it had a following. It had a little tribe that kind of developed around it. And
Well, that's the best story to say on how you can make something out of nothing. Literally, I mean, it was created as a joke, and they get a tribe to rally behind it, which then it does things like this. Well, guess what that does to people that jump in? They jump in up here. Now you just lit all their accounts on fire because it drops back down, and because everybody that knows it's a joke is selling.
right.
People don't know it's actually a joke. They think it's no, this is where the world's going. This is going to be your new currency. No, it's not. It's not Dogecoin. Sorry. That's not going to happen. And if I'm wrong, you guys can come and light me on fire later down the road, but I think I'm pretty safe on that statement.
Yeah, I think you're safe.
Don't buy Dogecoin. My personal recommendation, even though I don't give them.
Yeah, exactly. I mean, it's not something I would touch. I mean, I did it. I actually put that $90 into it when it was still under a penny. And I did it as a joke, basically, just to say, yeah, I got some Dogecoin.
Right.
I made money on it. I mean, I got out after it went to like 3 or 4 cents, but
exactly. Because it's a joke.
Because I
the
know
free money and run.
Yeah, it's free money. I'm taking it.
Tom
Russell
says,
looks pretty weak. Everything looks pretty weak. We got the DXY up today. Yes, we do have the DXY up today.
I can pull that up quick. Yeah, last I saw when it opened up, it was definitely positive. Oh yeah, she's moving nicely.
Yeah, got another nice up day today. So, for those guys who are looking at DXY, we're past that previous top there. So
Here's what we're looking for up here.
Yeah. Yeah, that's kind of that's a bigger resistance area. I like to see it blow through there, but we'll see.
Yeah, once we get above 94, we're gonna start moving.
Yep. So I think the market may have changed characters. We'll see. We'll see what happens here today, but definitely it's something that things they are changing.
Yeah, this was back from March, so this is that's a big level to be crossing right now. We'll watch and see if that closes above on the daily, because then it goes all the way back to November of 2020.
Tom made a good comment here. He goes, "Yeah, buy high, sell low." As somebody once said, when a person with money meets a person with experience, the person with the experience gets the money, and the person with the money gets the experience. Yeah, I don't know. He goes, "I doubt the later nowadays, but I think it's still true. I think of the millions of people, the 10 million people that joined Robinhood, I think they're going to get quite an experience."
Yeah, they're on their thrill ride, that's for sure.
Yeah.
And a lot of them were the ones that started with the GameStop and the memes that we talked about months ago. It's like, and these guys that were holding 6-figure accounts, and they said, no, we need more. It's not about the money anymore. Well, I'll be curious to see what their answer is, or what their reply is now after they watch those light up in smoke too.
Yeah, exactly.
All right, that's our rants. That's my rant for the day.
That pattern right there is a typical W pattern, W bottom pattern. If you start from like October, and you go from October down to beginning of January, and then up in the middle there, boom, and then up. Yeah, that's a typical W bottoming pattern, which would give us a target someplace around 100. We identified this pattern in the real-time update service. Very, very classic technical pattern. It should bring us right up to about 7 points from the top there, which is about 100. That's where we got it. We got it marked 100.
There's your free chart for the day. All right, we'll take one last look. Oh, it's trying to close again, so it is what it is. They're getting crazy. Maybe that's our friend Mr. Powell stepping in, because that's a big move in a short time.
It is.
Also right off those levels too.
Well, then another thing about people that have never heard of or been in a bear market before is that you do get wild swings. I mean, in 2008, 2009, we were down 700 points one day, we're up 800 points the next, you know, so it can get pretty volatile.
Yeah, it wasn't that long ago when we had the 1,000 point days. So that could very well be in our near future again. So be prepared, everyone. With that, we'll probably wrap her up for today. Tom, appreciate you joining us as always. And we'll catch you next Tuesday.
Yep. Thanks, Tom. Thanks, Dan. Talk
Take
to
it
you
easy,
guys
Dave.
today. Have a great weekend.
Bye-bye.